The silver tsunami has begun, crashing over markets with a force that feels biblical, unstoppable. The 10th of December, 2025 today. The Fed's 0.25% rate cut hit like a depth charge this morning, slicing the federal funds rate to 3.5 to 3.75%, but Jerome Powell's presser laced it with hawkish barbs that left traders choking on their lattes. Inflation's stubborn grip at 8% core PCE. Not a slam dunk for more easing, he said, telegraphing just 2 additional quarter-point moves in 2026, not the dovish deluge. The pits priced at 87% odds. The dollar? It dove headlong to 99.2 on the DXY, a 5-week abyss and 7% year-to-date bloodletting, its sharpest plunge since the summer tariff tantrums. And silver didn't ride the wave, it surfed it, smashing to a blistering $61 an ounce, up 102% year-to-date, eclipsing every record since the Hunt brothers' 1,980 rampage. But what pinned me to the screen, heart-pounding as COMEX feeds flickered, was the vault hemorrhage. 37.6 million ounces evaporated in 47 days, the fiercest drain since silver clawed to $49 and buckled futures exchanges. Why this exact moment, with the USD in freefall? My theory, hammered out from endless nights parsing Silver Institute reports and Bloomberg squawks, is that the tsunami isn't weather. It's stage 3 of a 4-stage cataclysm that's pulverized commodities from oil shocks to palladium panics. The Fed cut ignited the USD dive, supercharging the silver breakout, but that hawkish undertone? It's the trapdoor to stage 4. Where prices won't creep to $73 by Christmas, they'll lunge, slamming the window on anyone still on the beach. Central banks hoard 1,200 tons of gold in sympathy. BRICS whispers gold-silver clauses, and industrial vampires, solar EVs, 5G suck ounces faster than mine spit them. At $61, silver's not peaking. It's coiling for $73 by December 25, or the window seals with premiums tripling overnight. You sense the pull of the undertow, the clock's merciless tick, 2 weeks to Christmas, 15 days to potential regret, but choice lingers, faint as a retreating wave. Dive in now, or watch the tsunami recede, leaving you high and dry on fiat sands. Before we chase this swell to its crushing core, let me state the obvious. I'm not a financial advisor, and nothing spilling from my analysis is financial advice. This is raw, educational dissection from public troves, the COMEX warehouse tallies, Silver Institute deficits, IEA solar math, JP Morgan whispers. I've chased these ghosts, stitched the data, and the pattern that surfaces isn't fever dream. It's the same relentless grinder that's drowned doubters and drowned fortunes in silver's silver lining. Grasping why the silver tsunami has truly begun, why the USD's 99 dive is the perfect storm's gale, demands. We map the 4-stage leviathan that's capsized cargoes across centuries, a brute mechanism where complacency drowns in surge, recognition throttles in squeeze, and eruption floods the unprepared. This isn't folklore spun from thin air. It's forged in the forges of famines and frenzies, from Irish blight to OPEC oil, and today it roars through silver's veins with the Fed's cut as conductor. Stage 1 is complacency, the deceptive doldrums where plenty poisons prudence. Flashback to 1980's aftermath. Silver cratered post-Hunt, regulators unleashing a paper behemoth, futures markets ballooning 50 times physical supply, open interest gorging to 244% of COMEX vaults. Everyone slumbered. Prices leashed under $30 for a decade, central banks dumping reserves like ballast, while fiat printers idled in neutral. Debt? A whisper at 50% GDP. Industrial silver? Niche. 40% demand. Mines overproducing 100 million ounces yearly. The system purred, trust the exchanges, stack the paper, ignore the physics of finite earth. Complacency coiled the serpent, undervaluing silver against inflation's slow creep, setting the trap for the tide. Stage 2 is expansion, the swelling surge where fissures fracture but facades hold. 2008's abyss cracked it open. Lehman vaporized. 30 trillion liquidity tsunami from central vaults, Fed's sheet quadrupling to 8 trillion. Promises piled derivatives quadrillion deep, silver shorts flooding to cap rallies, prices pinned despite deficits nibbling edges. Industrial maw widened. Solar paced demand doubling to 85 million ounces by 2020. EVs triple silvering batteries. 5G antennas craving conductivity, no alloy apes. Silver Institute tallies 59% industrial chew by 2024, up from 40%, yet mine output peaked 2015 at 886 million, declining 7% since, as byproducts zinc and copper slacked. Deficits: 149 million ounces, 2024, fifth year running, bridged by above-ground scraps, but expansion masked it. Paper trades 1.00 to 1 physical. JP Morgan flipping shorts to long hordes in shadows. The USD floated serene pre-99 crash, but surge built the breaker. Money supply M2 exploding 40% post-COVID. Inflation masked by CPI slights. Silver coiling undervalued as fiat frothed. Stage 3 is the break, the squeeze where swells crest and complacency chokes. This is the now. The tsunami's froth breaking white with the Fed's cut and USD's 99 nosedive recognition ripping veils as physical clamors overwhelm paper mirages. COMEX registered? Gutted from 80 million October 2024 to 43 million today, 37.6 million yanked in 47 days, steepest since 1980's vault vacuum. November 17 alone, 6 million gone in hours, lease rates at 30% annualized usury for bars, backwardation biting with spot $61 eclipsing December futures by 40 cents, inverting contango's calm. Korea's banks halted sales February 14, indefinite capital titans tapping out. China hoards state scale, exports throttled, citizens sidelined by risk flags while vaults swell 200 million ounces yearly. India's imports record 2024 crush, rupee refugees stacking as fiat shields. Russia, London banned since April, funnels inward amid BRICS gold-silver musings. The Fed trap? Cut weakens USD 7% YTD to 99.2, luring hard asset stampede, but hawkish sticky inflation pauses easing, yields rebounding half point to 3.8%, volatility purging weak longs before surge. Industrial Inferno fans it. IEA's 400 gigawatt solar 2025 devours 200 million ounces by 2028. EVs doubling per unit. AI, 5G purity pulls 50 million more. Mines? 70% byproduct locked. CapEx starved. Output flat. Silver Institute's 118 million 2025 deficit. Tinder to the blaze. JP Morgan's vaults, 169 million ounces, 40% COMEX eligible, 13.4 million reclassed ineligible at peak demand. Why stock if industrial scrap as pundits scoff? Because the 1.00 to 1 paper chasm yawns, CME's November 28 cooling outage, spiking $56.72 in 10-hour blackouts, spreads dollar-wide. ETF inflows 2011 level, premiums 3 to 5 over spot, dealers delaying. The USD dive today? Catalyst supreme fiat, 54 years post-1971 Nixon. Printing masked by metrics, now converging with scarcity's scythe. Stage 3 squeezes shorts. $61, the surge's siren, $73 by Christmas math, or window welds as premiums prelude the flood. Stage 4 is eruption, the tsunami's towering wall where prices don't swell, they smash, drowning paper and physicals tide. Halts cascade weekly, deliveries default 20%, lawsuits lap at COMEX shores as pension hordes demand bars. Governments China, India, stockpile for BRICS alternatives, industries bid frantic for solar paste, monetary refugees overwhelm mints. Premiums? From 5 over to 30, 60%, $73 spot Christmas means $100 physical. Sold out queues. Year-long mint waits. Shorts crushed billions, early stackers generational. The Fed trap detonates. Cut sparks $73 sprint, hawkish pause volatility culls, but debt's 350 trillion demands deeper slices, USD to 95, inflation 4% reigniting, easing avalanche. JPM's $38 late 2025 call, $23 dust. Cities 36 to 39, vapor. Lepard 75 to 90 and 2026 conservative. Ratio 7:2 to 1, reversion math, $280. If gold, 4,200 holds. Cascade, solar firm sourcing whale triggers pure panic, BRICS clause leaks spike 20% bids. This time's torrent, tech mandates trillion subsidies, fiat debase post 1971, convergence cataclysmic. Counter the calm, substitution. Periodic table stonewalls, silver's conductivity unmatched, efficiency craters 20% sands. Recycling, 20% max from e-waste, solar lock 25 years, mines ramp, 7 to 10 years birth, Grades down 30%. CapEx nadir. Demand dies. Policy forbids EU, China, U.S. net zero iron. USD recovers. Trap rebounds it short, but 130% GDP debt services. 2 trillion 2027. Printing inevitable. Eruption gaps $50, 73. 100 weeks out. Christmas $73 floor. If tsunami holds. Window slamming as premiums prelude. Not if velocity avoid. As the silver tsunami gathers for its Christmas crest at $73 amid USD's 99 abyss, the Fed trap's undertow demands not paralysis, but precise dives ownership over speculation, fortitude over fright. First, pledge to physical purity. Forsake ETF illusions with cash settle escapes and futures, leverage that liquefied hunts. Embrace minted sovereigns, American silver eagles, maple leafs, kilobars assay stamped for borderless trade. Premiums 2 to 3% overspot your moat when they multiply. Procure from vetted like JM Bullion. Serial verified against fakes frothing in frenzy. Second, plunge timely physical 5 over spot now, but squeeze swells to 2040 by Christmas Eve, with Fed cut luring but trap teasing hikes, ladder buys under $60, 10% bites averaging the swells slosh. Third, portion prudently. 10 to 15% assets for ballast. Silver's 1-0 to 1 trap triumphs historical up to 20 if debt sirens wail. Blended with gold's steadier sail or treasury's yield net against rogue waves. Hedge the math, not mortgage the mast. Fourth, bunker securely. Home vaults for under 100 ounces, bolted, insured, fire-kissed or allocated depositories like Brinks for bulk, your keys kingdom, no banker backdoors or custodian clauses creeping. Diversify depots against confiscation chills and trap tides. Fifth, scout ceaselessly. COMEX weekly eligible, Silver Institute deficits quarterly, IEA solar pulses monthly. Kitco pings or TradingView dashboards your sextant, pattern proofing against squall. The tsunami's begun, $99, the swells shove, $73, Christmas the crest or windows weld with premiums prelude choice cleaves, crest the wave thriving, or beachcomb regrets as $100 spot mocks midnight masses. Fate's fallen 27 years average, $54 fiat deep, unprintable silver the scourge. If the surge stirs your sails, subscribe, I'll surf the swells real time, from COMEX crevasses to bricks breakers. Comment, $73 Christmas or trap tames it, your waves wet the wake. Next, manipulation's murky depths, fines fined, short shrouded, the capstone cracked. Tide turns, tether or torrent.